And, Nelson Nash, he says, if you understand what's happening, you'll know what to do. So once you understood the flow of money, how really people are trying to get the money to flow away from you, and you said, wait a minute, I don't want them to control my money.
Yeah.
I want to control my money.
Mm-hmm.
Right. And then you said, I'm going to have a lot of money come through my hands relatively to the average person over my career now. And I've got this debt I got to pay off.
Yep.
And I don't want to pay interest to other people. And I don't want that to happen. And paying cash and incurring lost opportunity cost, that's not a panacea either. So you just kind of started taking it over, and you started your system smaller, right? And then it's just kind of grown, right?
Mm-hmm. Yeah. And so I have, at this point, let's see, 6 different policies, I think is what we're at right now.
That's awesome.
And we're taking, we're recouping all of our debts that we have. And so you look at, you mentioned 13 years, you spend 13 years. I mean, I got paid the last few years, but not nearly enough to make full payments on my loans or anything. But I left school with $400K. The minute I walked out of residency, I walked out with about $375,000 worth of debt, plus all the interest and everything I'd paid before. So I was probably in the realm of, $450K for those 8 years to get me where I'm at today, which is, it's a huge amount of money. And then you add on my wife too. She also has debt, and we're taking that over though. And so we're not having to pay somebody else. We're paying ourselves at this point.
Right.
And so,
that's really, I'm sorry, go ahead.
And we do that for everything. We did that for, when we were in residency, if we would have put our money into, the standard stuff, a Roth or 401ks and stuff like that, we had the ability to be able to have cash flow that, when we needed a new car, we had the money to purchase the car. We bought the entire car with cash through our banking system, and then we pay ourselves back. And we've done that with both our previous cars now. And so it offers you the more, you could take money out of 401k, but then you pay penalties and you pay your underlying income tax anyways. And, I just find that this system works better for those types of things than what the traditional system would offer. And, and then you already mentioned it, you have that opportunity, lost opportunity cost. The minute that we would take in the money out of that, it's gone. And so we're able to kind of continue to recoup that with the plans that we have in place.
So it's kind of nice because you get both. You get this money growing inside of a tax shelter, which as a doctor, thinking of being in that 0% tax bracket when you get into retirement is reduces a lot of the stress that you might feel about how much am I going to have to pay in retirement. Plus, you get to use the insurance company's money to go out and pay off these debts and to finance your major purchases, maybe pay your taxes. You've even loaned money to other people with the right collateral, right?
Mm-hmm. Yep.
And all of this at 33 years old in 6 years. Now, I quite honestly, I wish I was 33 years old when I learned about this, and I've been using it. I'm 53. Mm-hmm. So I think that's really, really incredible, and it's really cool. And your dad showed this to you, taught you about it, and then you did a lot of studying on your own. You participated in your education on that side of it, right?
I did. And so I did both sides. I'm a skeptic.
Yep.
To be bluntly, I look at both sides. And so, I follow a guy that I respect, one of the white coat investor. I follow his blog, and he is well known to not have the same beliefs that I have with respect to the utility of the infinite banking concept. And so I went to both sides and I did my research, and I, looked at the pros and cons, and there's no perfect investment. That's the biggest thing I'd say out there is that, you're not going to find one thing that's going to fit, you perfectly. But what you have to find is something that you can live with. Most people throw money into stocks and they have this, what's called the planning fallacy. They think that they're going to, make this amount of money through their securities and through their, whether it be, hitting it big because they think they're going to be the next Apple or they're going to be the next Amazon that they're going to be investing in. And they don't have any of kind of the loss aversion that they should probably have, meaning that they have understanding that there's risks associated with that. And me personally, I think that I'm not a big gambler, and I wouldn't say securities are gambling, because as long as you
I would.
Well, it is. But if you use it like low risk, so index funds, for instance,
Okay.
that, you know, kind of go with the market, there's still, obviously there's risk, right? And
Yeah.
undoubtedly there will be another 1, 2, 3 bear markets, maybe more, before I'm at my retirement age. And the
Absolutely.
question is for me at least, is when is that going to occur?
You
And
have no idea.
you have no idea. And so for me, I know that these companies, I researched it. I mean, you know, these companies pay out dividends. They've been around for hundreds of years. You know, when I look at how would I lose my money in these types of things, it would be only if these companies were to go under. And if these
Right.
companies were to go under, it's not just me that's going to be in trouble. Our whole country is going to be in trouble. And, you
The
know,
whole economy. Yeah.
I mean, the world is going to be exploding. And so,
Yeah.
I think that that's where I get it, where I like these as well, because I don't feel the pressure of loss with these.
Right.
It's continual gain. And the only loss that I can sustain is if I take and move my money, you know, you mentioned, you know, loans or into investment opportunities, which I'm still going to do, because I think
Yep.
you have to take some risk with what you do, but
Sure.
I don't have to. I know with these things and the way that we have it planned out, if I get to a certain point with my policies, I will have financial freedom when I want to have it.
Yeah.
Now, I personally don't think I'll ever probably really stop working because I love what I do, be it either in medicine or even now in finance. But there's some, you know, it's that little security blanket, I feel like, that you don't have with, you know, the uncertainty of the future. And I really don't think, at least from my standpoint, I know that the returns may not be as astronomical up front, you know, when you use whole life or infinite banking concept. But the security blanket that I feel like is there, for me at least, it makes me sleep easier.